Good afternoon and welcome to this week's macroeconomics analysis session for December the 4th, 2015. DMAC here, and sitting alongside me is Jeff Saffer, head of the Elite Investors Club. Welcome, Jeff.
Thank you, Dave. Hello, everyone.
Let's get underway. There's been a lot of news on the market this particular week and certainly has given to increases in volatility, particularly a few key announcements in the Eurozone. A lot happening in the United States as we speak, and certainly some data coming out in Australia, not just this last week, but in the week ahead. Our disclaimer: the content of today's presentation or any other Elite Traders Club or Elite Investors Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. So before making an investing decision based on the general advice presented in any of our presentations, you must consider whether the advice is appropriate in light of your financial circumstances. Alright, disclaimer out of the way. Two very important people in the world at this point in time, Jeff, Janet Yellen and ECB, what's his name?
Super Mario?
Super Mario. His official title is
ECB President.
ECB President, that's right. Okay, so this week, Jeff, some data out of Australia and the US and a little bit out of China. What was the market moving news this week?
Yeah, look, I won't go through every single item there. I'll probably talk about three main ones, and I'll just kick off with Australia. Probably the least implications for global markets, but it's obviously relevant to Australian investors. The RBA held its monthly meeting, left rates on hold, completely expected. What was interesting is that the statement was very similar to the previous month. They made a couple of very minor tweaks, and reading between that and some comments from Glenn Stevens recently, it's really indicating that the RBA has no real inclination to cut rates anytime soon. And I sent out a note to my members on Tuesday afternoon, basically saying, it looks like rates are going to be on hold for a number of months.
Did you tell them to chill out like he told the press gallery to chill out?
Oh, and I'm not as cavalier with my language as Glenn. He's actually mellowed a little bit over the years. I think he's only got maybe about 9 months to go in his term, so I think
I
think that might be why. Look, basically, it still looks like the next move of interest rates is going to be lower rather than higher, but it's not going to be for some time, and it's going to take something pretty significant for that to happen.
Yep.
So that was in Australia. GDP data came out a little bit stronger than expected, but really on the back of some strong mining exports. Everything else locally is still struggling. The two things I will talk about are those two people that you put the pictures on the screen there. Janet Yellen. Obviously, the Fed has got its own rate decision coming up this month, where we've talked a lot about the fact that they're probably going to raise rates. And I did mention last week that there was some important data this week, which would have provided pretty much the only... weren't expecting anything shocking from the data, but if that had disappointed, that might have been a stumbling block. There's nothing really in there to stop the Fed raising rates this month. In particular, we had private jobs data on Wednesday night, and that came out pretty solid.
Yep.
So we should get pretty good non-farm payrolls tonight. The PMI figures were a little bit weaker, but nothing to say that the American economy is in trouble.
Yeah.
So I think you'll see rates being raised this month. Market's pricing in 72% chance.
Mm-hmm.
It's about right.
Yep.
I think there's a good chance, not guaranteed, but certainly likely. And then, Mario Draghi in the early hours this morning, around about midnight, I think it was.
That's right.
Came out and they had their own press conference, which I've been talking about for a few months. I've been saying that the ECB are going to announce more stimulus, and it actually disappointed a little bit. The stimulus was altered. The bond buying program was altered a little bit to go for longer, but not harder. So they're still pumping in the same amount of money.
Yep.
They can spread it over different types of bonds, but and it will go for another 6 months, but there's no more money and that's what the market was hoping for. And on top of that as well, they cut their official rates by a smidgen, by 0.1. Market was expecting 0.2. So, just it. The market was really hoping for a huge shot in the arm from Mario Draghi to get the European economy kick-started, get some inflation happening, and he didn't come through.
Yep.
And some people are worried that he's unable to come through, that he's got nothing left in his war chest. So that's actually why the markets sort of struggled last night.
Because normally, if you were going to get a rate drop, as an example, obviously the currency would move in the direction of the rate drop. And not being as big a rate drop as was expected.
Yep.
So
the euro actually went. So yep.
So there is that disappointment there, but also probably, even that aside, you might expect the euro to rally, 100 pips as an example. But obviously the broader issue there that the stimulus is not going to go on forever means that perhaps that easing's coming to an end, and as a result, the euro put on about close to 300 pips at one stage. Which is a big move.
Which, like you said, normally if there's a cut, the euro should be going down.
Yeah.
But the cut's smaller, and the implications for now we have to not just factor in what happened last night, but what might happen in the coming months and years.
Yeah.
Like you said, if the whole stimulus, if last night turns out to be sort of when the easing is starting to stop, then the euro has got a long way back because it has struggled, significantly in the last few years.
Absolutely.
So that's really it. It's a week of interest rates on hold in the US, about to go up on hold in Australia, about to go up in the US, and cut but not by as much in the euro.
Yeah. Very good. All right. Well, let's go through and have a look at the markets in any case, and before we go and have a look at the week ahead. So this is the XJO. We've been noticing of recent times we've got this level around the 5,300 handle on the market where price just seems to get stuck, and we've gone up to that level a number of times. We haven't yet been able to close strongly above it and remain above that level. So whilst we've had brief periods of price getting to that level, it hasn't been able to hold, and it's quite a bearish sign for our market at this particular point in time. Today the market down quite a fair bit on the back of overnight moves on the US market, so we might go and have a look at that. For the time being, we are still in very high market risk as we speak. Certainly trying to get above that 53 level there. You can see we just don't seem to have the momentum going, all guns blazing at the same time. So let's go and have a look at the US, and you'll see last night's candle there. Again, we've talked previously about a zone of support, these areas of points of demand all the way through, which once broken tend to act as points of resistance into the future. We have moved up strongly past those levels in recent times, only to come back and test them, moving back up. One thing that's a little bit concerning for me on this market, Jeff, I don't know what's going to happen into the future, obviously, but we've got these lower peaks when we've rallied up to previous levels. So whilst this is predominantly the better part of 6 to 8 months sideways sort of movement, the fact that we had all that volatility, we've come back into this area, but we've still got these lower peaks, these major points, or at least sort of significant points of supply at this point in time. Pretty bearish price action in the last few days, Jeff.
Yeah, not necessarily calling the end of the US market, but what is interesting is that often at the end of a bull market, you can get some consolidation first, so some indecision starting to come in. You had the first sort of scare, it's bounced back, and then it looks, like you said, it's sort of rolling over a little bit, which can happen. You get price action like that all the way through the cycle, but some things are taken into consideration from a fundamental perspective that valuations are pretty high in the US. The bull market has been going for 6.5 years, which is pretty long for a bull market. Percentage-wise, it's a pretty big bull market, and we're going to start a rate rise cycle. So, the American economy is still pretty strong, so it's not suggesting that the US market's going to collapse, but there are a few, if the chart is starting to look like, if you zoom out, you get such a nice big uptrend, and then, I don't know whether you actually can do that just quickly. Certainly the recent price action in the last 12 months doesn't look like...
It's not like the previous.
It's not like the previous.
Yeah.
And so to me, that's a little bit scary. I mean, I pay not as much attention to the charts as you do, but certainly if I see something like that on the charts, knowing that that's happening after a big bull market, stocks are pretty expensive, that would get me a bit worried.
Yeah.
So just be aware that what might happen in the next 12 months or so.
Yeah, absolutely. And I think that's just, these are just purely observations, but quite often what does happen at the end of, longer runs in bull markets is you start to get very much a widening of price action. And I'll just draw that in just as an example. And so we're starting to get big ranges from up and down. So,
it's like a couple of wobbles,
Yeah,
right towards the end before the drunk market kind of topples over.
Absolutely, it is. And if you go back to, not saying that this is necessarily going to happen, but if we go back to 2000
Well, they had in July, August of 2007.
Yep.
There you go.
Yeah, you start to get these sorts of things happening where price wiggles in between, and then depending on which way it ends up going, eventually following a line a bit further down. So again, just observations. We can't forecast what's going to happen into the future. We just need to obviously manage our investments accordingly to key market metrics that we use, and we've got our market risk indicator here at the moment, which is wobbling around a little bit at this point in time. So we just need to observe that and respond accordingly. And I think that's a good thing about being objective and not subjective. Jeff?
Yeah, I was just actually going to add pretty much that obviously I'm not necessarily getting out a crystal ball and saying the market is going to turn over, but the possibility is there, which is the possibility is always there.
Sure.
The important thing is to make sure you don't get caught out in it if it does happen. And like you mentioned, you've got your market risk indicator, which will take you out of the market, and you'll find I know when I see ETC when the market's going up, obviously the scan results low risk. Lots of trades go in there. When the market starts coming down, the hits dry up. So the system that you use will certainly give you a lot of protection against that. And I use similar fundamental base, but similar kinds of things in EIC, where certainly when the market conditions, more so from a valuation perspective, are not good, I won't buy many stocks. I'll be selling out of a handful. When the market looks cheap, adding in a lot more stocks. So, I don't try and predict what the market is going to do. I look at the market, what it's telling me to do, and then roll with that.
Yep, certainly. All right, so let's just jump back into our PowerPoint there and have a look at the data coming out next week. A fair bit coming out in Australia, Jeff. Other than the Australian news, what's going to be significant next week?
Yeah, look, I actually don't think there's quite a number of reasonably important indicators out next week. I don't think any of them are market changing. In Australia, certainly jobs numbers have been pretty strong recently. Like to see that continue. What will be really interesting next week is the mid-year economic and fiscal outlook, where I think they will basically the government will come out and say our mid-year budget was way too optimistic, and growth isn't going to be as strong as we predicted, and the deficits are going to be bigger than we expected. So,
is that the budget that Joe Hockey originally made up?
No, this is
revised.
Oh, sorry, that's Joe Hockey's last budget.
Yeah.
Yes. So there's two issues there. Joe Hockey came out with a pretty he had his scary one last year. He had a fairly optimistic one this year, and that was based on two things. Number one, the economy would just get back to normal pretty soon. And number two, all of the cuts from scary budget number one, and the money that the government would save, he just assumed that a lot of that would go ahead, whereas most of it has been knocked back by Parliament. So what you've got is the first one: Australian economy is just going to get back to normal. Probably too optimistic, and all those spending cuts by the government that they were assuming would happen don't look like happening. So there's going to be, in my opinion, a much bigger hole in the budget than Joe Hockey had presented to the country. So that's the big one in Australia. I don't think it's not going to be a huge surprise, but it will set the tone a little bit, and I think will contribute to the story that's gaining sort of traction, that the Australian economy is really facing a couple of fairly tough years ahead. Over in China, trade balance, expecting a big surplus there. CPI is very, very low, about less than 1.5%. Industrial production and fixed asset investment will probably continue to slide. In the US, core retail sales probably weak again. PPI negative. Consumer sentiment has been a bit wobbly in the last couple of months. This particular survey has been a bit stronger than the other one, but I think consumers in the US are getting worried about this rate rise. So I think that'll be an interesting one to pay attention to, and in England they'll keep rates on hold.
Yep. Okay. So not a lot of significant market moving events next week, but certainly interesting to see what's going to happen on the political environment now that Malcolm Turnbull's back as well, and what the outlook is for the next 6 months in particular, and what implications that might have a bit further down the track as far as the RBA is concerned. Right, folks, that's it for this particular week. I hope you all have a good weekend, and I'll catch you all on Monday morning for the Elite Traders Club analysis session. Thank you very much for all those people who responded to my email regarding the proposed changes in timelines for that. It's all the overwhelming feedback is that people are very happy to have two sessions, one of a Friday afternoon and one of a Monday morning. So we'll run that out after Christmas once we're back for the new year. In the meantime, it's bye from me.
And it's bye from me.
Thanks for watching.